Good afternoon. It is Monday, August 24th at 5 p.m. I'm going to do a quick thoughts of the week here on stocks. I want to talk a little bit about market breadth and monetary policy. Market breadth is not as good as people would have it be. The market is still dramatically led by a small handful of stocks. Back in June and July, there was some market rotation that made breadth look better. But the reality is that most of the gains are still in a handful of large cap stocks that are leading the indexes. The equal weight index actually peaked 2 years ago and has not set a new high. So if you consider that we have market cap weighted indexes that are to the moon and equal weighted indexes that have not set a high in 2 years, that should tell you where the bargains are. A couple of years ago, I published an article, Strength Beyond the Balance Sheet. I pointed this out a couple of times, 8 years ago now, when everybody was on the dollar is going to hell bandwagon. And I said, nope, the dollar is going to rally and it'll go up and up and up and up for many years. The dollar will remain the reserve currency and stocks will unwind. We ended up getting two mini bear markets. In 2012-13 and then 15-16, essentially those were periods when the stock market moved sideways. I think given the stratospheric levels of what's going on now, big risk that people should consider is what if value of the dollar goes up and interest rates goes up? What does that do to the there's no alternative, right, scenario where everybody's just buying large cap stocks? There is a very large risk developing right now. Don't know if it gets here tomorrow or sometime in the fourth quarter or sometime early next year, but sometime in the very near future, the market will wake up one morning very angry, thinking, hey, interest rates aren't going to zero and negative, and the dollar isn't going to hell. And if dollar does go to hell, you have a lot less ability to buy things. I included Mark Newton's technical piece, weekly technical piece. I'll probably keep including his weekly piece. It's a very good read. He talks about market breadth, about how the market is led by just a handful of things. He used the value line geometric average versus the composites and NASDAQ 100. So really nice technical summary that I'm subscribing to him. I'm not going to give you his daily stuff. I don't think that'd be fair. So if you are a swing trader, you might want to subscribe to this guy for $79 a month. I'll see if I can get a discount code. But he's basically I replaced Avi with this guy and sentiment trader. The information is just much more developed. Rather than just opinions about which way waves go. I've found 10 other guys that are just as good on Elliott waves. So, you know, why not get the better information? All right, stocks I looked at this week. Micron still operates in an oligopoly. Still got to have them for the cloud. And stock has not reacted well lately. I think it is a harbinger of things to come in the semiconductor market. That is why I have started to buy just a handful of puts on semiconductors. But again, we do not want to take very many short positions, nothing that's particularly large. Really, we just want to fall off the cliff protection because the market can remain irrational longer than we can remain solvent if we buy a lot of short positions. So I've kept my short positions to single digits. Basically meant that my portfolios have moved sideways after the initial little rebound in April and May. And I'm okay with that because reality always tends to come back. So if you take a look at the Micron chart, you can see that this level here, right, he had a hard time breaking through, came back, then got all the way back down to it. If you can get Micron in the middle 30s, I think you'd be pretty silly not to. Cisco's gone down a couple more dollars since I mentioned it last week that it was having trouble. I'd have a hard time buying Micron until it retested the recent low, which is at the top of a range. So it could definitely get into here. I'd probably be a buyer at the top of the range, though, unless bad things were going on. Somebody asked me about Energy Transfer Partners versus Kinder Morgan. This is where it comes down to knowing your companies that you're invested in. Why I keep telling people, look, stop studying 100 companies and trying to have 50 and 60 and 70 stock portfolios. It's too hard to do. Kinder Morgan's better than Energy Transfer because Kinder Morgan is much more heavily into natural gas. And we know that Richard Kinder has been accumulating shares for some reason, probably a strategic transaction. Energy Transfer has oil pipelines that I'm not really excited about. So why would I want 10,000 miles of oil pipelines over at Energy Transfer when at Kinder Morgan I can be almost entirely natural gas, which is what Buffett is excited about, and then some CO2. So take a look at their operations maps and what they own and what it's doing and where it's situated, and you'll find that Kinder Morgan has a better network than Energy Transfer, meaning that their network per mile of pipe is going to get more money. Both companies are heavily in debt. Energy Transfer is trying to grow their way out of it. Kinder Morgan really won't build anything unless they have a prepaid buyer. So I like Kinder Morgan better than Energy Transfer. You can take a look at the charts. The market has adopted my view that Energy Transfer, because of oil, probably is the worst investment. Kinder Morgan has moved basically sideways after the plunge and then a rebound. Weirdly, this really is overstated in my opinion because their numbers are not going to come in that much worse. Itron. Here's a stock that I've talked about ever since they bought Silver Spring Networks. You can compare them to the S&P 500 and NASDAQ, and they have been keeping up with the S&P 500 until very recently, but not with NASDAQ. This is a small company. It should end up being in the S&P 500 at some point. They do infrastructure for cities to make them smarter and for the utilities. What is this company going to do if Biden gets elected and he does a massive infrastructure bill to modernize the cities and utilities and the infrastructure? If we can get this stock around 50, it's currently in the low 60s. I think that is a jackpot. I think that around $50 a share. I have this on a comparative chart, but in this zone down here, take a look at the massive support that used to be resistance. So we get that back in here, which is low 50s. I think that we are golden with Itron. Nikola versus Tesla versus Ford. Hey, what happened to Nikola's momentum? Look, it's zoom, zoom, zoom on hopium, hopium, hopium. Somebody else used the word hopium on Bloomberg this morning. I was very pleased with myself. Nikola came down. Probably you could have sniffed it right here. Came back up. I think you'll get another chance at Nikola. I wouldn't buy it unless it was in the teens. In the teens, I would take a look at Nikola. I think that you need to really break down what the order that they got amounts to in profitability if it's delivered, and what is their capacity to do more. Ford, way down here, just kind of chopping along sideways. What company do you think I want? Do you think I want Tesla, which has a PE ratio of like 17 zillion? Or do I want Ford that has built-in clients, built-in families that love them across the country? If you know you're going to go EV and you can get an F-150, might you not do that instead of spending the extra $30,000 or $40,000 on a Tesla pickup bot or whatever the hell that thing was? Meanwhile, over at Ford, they have robots. I call them Ford bots. Their fourth industrial technology revolution stuff is off the charts. They're one of the most technologically advanced companies in the world, not just car companies. They have better technology than Tesla, hands down. And their Ford Mach-E is going to be able to fly. See, it's flying in the stars right there. Actually, it's just very fast. And it's as big as a Model Y. And I was explaining this to somebody the other day. It's going to do everything the Model Y does. Why? Because it has everything the Model Y has. This idea that Tesla has a major advantage because of the miles driven, excuse me, Fords have computers too. So not only do the Fords have LiDAR, which isn't enough, but they also have AI. So whereas the Tesla is pretty much reliant on AI, the Ford is going to have LiDAR plus AI. Taking both systems, making them better, right? So I believe that the Ford Mustang, especially if Biden wins and does an incentive to buy cars, I think the Mustang is going to be one of the top selling cars in America, and the Ford F-150 obviously will be as well. So what happens when Ford says, hey, we're going to spin off a few of our plants, we're going to sell some of our property, because we're going to do joint partnerships on, say, medical devices, which they've already done, right? Just take a look at these companies and learn what they're doing. Ford has been run extremely well. And even though Elon Musk somehow gets everybody to buy into his stock and he gets all the people on Reddit and Robinhood to buy Kohls, at some point, I'm telling you, Tesla's going to drop 50 to 75% in the next couple of years. I don't know when it happens, how it happens, what triggers it, but it's going to happen. It's going to fall off a cliff and it's going to go splat. Now, splat for them is probably $350 or $450 a share, but it ain't $2,000. Kohls in my backyard. I know people at Kohls. I've had talks with people at Kohls. Maybe I know some things about Kohls that other people don't know. It's all legal, but I get some pretty good insights. Kohls has a great franchise. They're doing better online, but they have coronavirus just like everybody else. They're revamping their stores right now. They have great real estate. They cut their dividend. Everybody hates that. What happens when they bring their dividend back in a year or two? They still have the deal with Amazon, and their real estate is awesome. Oh, and by the way, they're going to produce energy, but no love from Robinhood. Raytheon Technologies, there's really not much you can't like about this company, and I think this is a very good way to play the space race, right? Because they're one of the leading 4 or 5 companies out there. Aerospace, right? Pratt Whitney is going to come back. So you have a company here that I think, remember there was a merger. I think that this is just volatility. And I think that if we can get them on a dip down in here, a little further down if there's a bigger correction, I think that Raytheon, somewhere in the 50s, you probably need to own it. All right, closing thought. Caution is still warranted through Q4 because of the election, because of the idea that monetary policy can't remain super loose forever. And once the election is passed, what incentive does the Fed chairman have to just pour money on the top in order to inflate the stock market? Maybe somebody tells him to do an infrastructure bank. Maybe there's legislation that changes the nature of how the Fed operates. And maybe the market anticipates that ahead of that legislation in February or March. Don't think that the Fed operates all by itself. It does not. The money that they poured onto the economy came from Congress. That's where the money came for them to buy the corporate bonds to extend the maturity dates for all these companies that were otherwise going to go bankrupt. Because that is what was going to happen if they couldn't extend their maturity dates. I am still sticking with the virus is going to be bad through the end of the year, and that we're not going to have anything more than an emergency vaccine around New Year, and that we're not going to have a real vaccine until the middle of next year. Sinovac with China is basically developing a vaccine the old-fashioned way, the same way that Merck is. China's going to have it around New Year. They'll give it to their people first. We might be able to get theirs by the middle of next year, but by then Merck will have one, in which case we'll probably just get Merck's. So probably the Chinese are inoculated a little bit ahead of us. But by the second half of next year, we probably have Merck's vaccine. This is presuming that a vaccine will work. It probably will. It usually does. But the new technologies from mRNA and DNA and putting it on the back of a cold virus that only gives a few months of protection, yeah, that can work for medical personnel and military and other people who are high risk. But the reality is that mass vaccinations of hundreds of millions of people in the United States does not probably come until we have just a more traditional vaccine, unless they certainly suddenly figure out some of these other newer technologies that have never ever been approved for anything ever before. So I'm not going to get in line for those until I see whether or not people start growing extra parts. All right, so be careful out there. There's really no good options this week. I've been looking all day long. I was looking for options. I'll look at a few more tomorrow morning after the market opens and I see what's going on. But I am looking for a topping process in the stock market, maybe a top in the stock market this week. Although I think for sure by October we have a top. Newton talks about that as well. Is we're going into a seasonally tough spot. I would say take a look at the monthly returns of the S&P 500 and NASDAQ in 2018. I really just think that it's lining up to look like 2018. The charts say so, the economics are worse, and monetary policy probably isn't going to be as forgiving as long as people think. And the dollar, when it ticks up, and it will, because that's what happens when people get skittish, that's what happens when the economy gets worse. People go to the dollar because they're scared. That's going to happen again. So unless there is a miracle vaccine, you should expect another bout of volatility in the next several months. So be careful. It's okay to hold cash. If you want to chase, go ahead and chase, but you better be a very good trader. You better have the ripcord deployed quickly, and this idea that you can set your stop losses at 1 or 2% behind you, it just doesn't help. All that does is shake you out in the middle of the day. What you need to do is set your stop loss to 7 to 12% below you, except that would be your loss, because that's the best you're going to do when the market opens, limit down, and says, haha, gotcha. All right, we'll do a Q&A in the morning. I'll try to get an option piece out, but I just don't think there's anything exciting about that. I have been working on the Fundamental Trends website, and I thought it got a little overbearing with some of the advertisements, so I pulled them off. There's a couple, spots where the public goes. There will be some advertisements, but I made the rare chat full width. Got rid of everything on there. So we have a nice format there. I was on Discord today with a whole bunch of millennials, and they are funny creatures. They really do think that they are something else. So be careful out there, because I will tell you what, it is interesting. I might move our chat room over to Discord. I might. I have to figure out the technology. I was looking for a developer today on LinkedIn, so I will probably have this site Americanized, because I don't like some of the stuff that my Indian team did to the website, and I'll probably throw a couple $1,000 to upgrade it. I pretty much have to do that every other year anyway, so we're coming up on that time. All right, everybody have a good evening. It's 91 degrees here in Milwaukee with 90% humidity, and I'm going to go have a salad and sit by the pool, and then I'll come back in and jump on this tonight. Have a great day.